Hi, welcome investors in Genesis. This is the monthly update. How are we navigating the market? What we think is going to happen in 2023, some of the themes and where we are focusing on. There is so many uncertainties that's going on, everything from the war that's happening between Russia and Ukraine to what's going to happen in terms of the economic climate. Having said that, let's begin. To summarize, probably one of it is bankruptcies and scandal, right? We had the Terra Luna collapse, $60 billion of market cap in that one particular coin evaporated, wiping away not only the $60 billion, but probably another $400 billion or so in market cap across all the other crypto projects. Collapse of FTX collapse, taking away some of the investor investments. And in addition, it has resulted in lack of confidence in this entire industry. But with that backdrop, we also saw a lot of adoption and new regulations coming in. We've been talking about regulations, the need for proper regulations, right? To be able to have the right regulations, not over-regulate the industry, not under-regulate the industry, to be able to have the right regulations so that innovative projects can still launch and use the infrastructure available in the US to be able to create more innovative products and at the same time protect investor interest and people not getting swindled and scammed by all these companies. So we saw KPMG in Canada. They added cryptocurrencies, Bitcoin and Ethereum to their treasury. Fidelity has entered the crypto space. They launched an ETP, an exchange traded product in Europe. And BNY Mellon, right? It's one of the largest custodians in the securities market. And they are launching a custody platform, which will make it easy for institutional investors to have access to these crypto products because custody is one of the big issues. Part of the reason for the loss of confidence when FTX collapsed is around custody, right? A lot of funds had their assets in FTX, and whereas FTX used the fund for other needs illegally. So having right custody platform, a solid custody platform, which focused on security first, is going to be hugely beneficial in onboarding new people coming on into the space. There has been a lot of warnings around the regulatory side of it. Binance had a $500 million fund to be able to invest in Web3 technologies. The CME group, they launched a reference rate that is also very crucial because one of the issues that SEC, the reason why SEC still hasn't approved an actual ETF for Bitcoin or Ethereum is because of this issue with the reference rate. And CME Group, they launched that, which will lay the foundation for launching an actual exchange traded fund. Right now, it is more around using Bitcoin futures as a proxy for launching these funds that are available in the market. It's not a true ETF, so that will lay the groundwork to launch a true ETF. Plenty of crypto regulations around the world. Charles Schwab has announced that it's starting trading different crypto ETFs. There is other Bitcoin and Ethereum futures that are denominated in euro that were launched in Europe. BlackRock has a platform called Aladdin, and they are offering their institutional investors access to crypto through the Aladdin platform. This is one of the biggest news that happened last year, which is not covered to the extent that some of the other scandals and bankruptcies has been covered, because Aladdin is the de facto platform used by a lot of institutional investors and providing them ease of access to crypto products like any other equities or any other security would just make the process easier for more institutional money to come in. And right now, there is some hesitation around it, but we're going to see more coming into the space in the long term. Brevan Howard, they have one of the largest crypto hedge fund launch, and they are one of the traditional hedge fund players in the space. So even with all of the scandals and bankruptcies that are happening in the space, we are continuing to see more adoption. We are continuing to see proper regulations that are coming into the space. Okay, so let's specifically now look at what happened at the end of last year, right? So King Dollar, the King Dollar, we're going to talk about what has the various pieces of puzzles around the dollar ecosystem and where the dollar goes from here, right? Because the way the dollar goes is going to have an impact on multi-asset class. In May of last year, there were Biden-Powell and Yellen had a meeting together, and at that point, the dollar index was at 101. And by September, we saw a rapid move, right, almost like 13%, which is a big move for a currency by September. And calling it the unofficial Plaza Accord. So the Institute of International Finance came out and said both the euro dollar and the British pound dollar are 20% undervalued, right? And the People Bank of China, they instruct all the other state-owned banks to be prepared to sell dollar to curb yuan's depreciation. So that happened in September. And then the central bank swap lines opened up, right, with what happened with Bank of England. And the UN came out and said, hey, like, no, we cannot have a strengthening dollar. If we have a strengthening dollar, then a lot of these developing economies are going to suffer. The IMF came out and said that if the dollar strengthens further, it's going to increase the likelihood of debt distress in a lot of the developing countries. And diplomat, Japan's Kanda, came and said that they have intervened in the FX market. That also happened in September. So there has been a lot of currency kind of war that's been going on around the global central banks. So we saw a run up from 101 all the way up to like 114, and it's back at around 101. And so that's where the dollar is at like now. So why are we talking about the dollar? Why does it matter? So three reasons. One is that where capital is flowing will help us navigate how we are investing in Genesis, because where dollar flows, it affects every single asset class, right? It affects real estate, it affects the equities industry, it affects venture capital industry. So it affects pretty much every industry, including the digital asset space, to see where the money is going. And so the past is not equal to the future, but there are things that happen in the past that rhymes again. So if there is a rebound of the dollar, then there is going to be a significant risk to the increase in the digital asset prices that we saw at the beginning of the year, right? In January, we saw, Bitcoin rise up almost like 35%, Ethereum similar. We believe that is fake pump, right? It's a temporary pump, and don't believe that it's sustainable. So we are predominantly in cash right now, which we'll talk about in our portfolio review. And there has also been this disconnect between what the Federal Reserve is saying and what they are doing and what the market is doing. And we call it the biggest stake or the highest stake poker game that's been going on, because there is a significant deviation between expectation and reality, right? So someone is lying in this space, whether it's the Federal Reserve, they are saying that it's going to be higher for longer, right? That's their mantra. They're going to keep raising the interest rate, and they're going to keep the raised interest rate for the longer period of time. Whereas the market doesn't believe what the Fed is saying, and it's been a disconnect. So one of them is wrong. Either the Federal Reserve is wrong or the market is wrong. We believe that the Federal Reserve is going to follow through on what they are saying. The market might have miscalculated what the Fed has been talking about. So it's one of the biggest discrepancies that we are seeing in the market in the last 40 years. The yield curve is inverted, and the steepest inversion in the last 40 years. So this again is important, because if the Fed's funds rate, right, it controls so many of what's happening in the economy. And if the market is pricing it incorrectly, and if the Federal Reserve, it sticks to their guidance and what they are saying, then the market is pretty much wrong, right? They have overestimating the decrease in interest rate that's going to happen. and that is going to have a risk across all assets, right? Across stocks, real estate, across every asset. So the run-up that happened in January, we sat out of it because it's not a very conducive market for investing. And it's a failed start. With failed start, we're going to see the reversal. So we are remaining patient, right? We are in no hurry. We want to make sure that we are deploying the capital at the right market conditions. But we want to play it such a way that heads we win, tails also we win, right? How do we do that? So if our thesis is correct, this is a false start, we are in cash, perfectly fine, right? If our prediction is wrong and it's a start of a bull market, then we are making some of these investments in our venture studio, which we'll share about later. Truly excited about some of the investments that we are making on the venture studio side of it. They're going to produce 10, 20x return or maybe even more. So that's how we are positioning ourselves. Heads we win, tails also we win. And so having said that, let's look at the year forward. Where are we looking at for 2023? So we already talked about the Fed interest rate and what's happening in the macroeconomic conditions, right? Some of the biggest disconnect that we have seen in the market that needs to get resolved. Either the Fed has to lower their interest rate or the market has to increase their expectation of the future interest rate. One of the two has to happen or a combination happens. That's going to be one of the biggest themes for the year. Regulations, we're going to have more regulations, now specifically around the launch of stable coins and what does it mean to have a central bank digital currency. So there is a lot of regulations that are going to be happening in there. Crypto banks or banks that provide access to a lot of these crypto companies. In the last week or so, there has been systemic curbing of all these banks. We saw Kraken, what happened last week. The SEC came and fined them, and Kraken folded, saying that, okay, no, they're not going to offer the staking product for US customers, which might be the right move because Kraken was offering more rewards than what Ethereum network was offering. Then the question is, where is that reward coming from, right? So that is the right move. But other providers like Coinbase, they only offer the staking reward. In fact, they offer less than the staking reward because they take a fee from what one would do by staking on the Ethereum network on their own, right? So things like Coinbase, we believe are accurate in terms of being able to make it easier to provide the staking services, but we'll have to wait and see how it evolves. The contagion is not over yet. Some of the impact of what we saw last year with the collapse of Terra Luna and the ripple effect resulting in the collapse of FTX is still not over. We believe that at least another $1 billion project in the space is going to collapse. So that is also one of our prediction. We'll also talk about Ethereum and Wall Street and what it means. There is EIP 4844, also called as the Shanghai upgrade. That is going to be happening. We'll talk more details of what's happening in that space. We are bearish on Bitcoin. We'll give reasons why. Then this whole thing around ZK, as ZK is zero knowledge proof. And zero knowledge proof essentially provides a way in which we can have privacy in a public blockchain, right? So when you have a blockchain, all the information is transparent, all the information gets recorded onto the blockchain. So how do you actually do business transactions on the blockchain and while maintaining privacy? And zero knowledge proof is one of the protocols that's been in development for the last few years. And this year, we're going to see the launch of many of those zero knowledge protocols, and we're going to be participating in that. Another big theme for 2023 is Web3 gaming. We saw the potential of Web3 gaming with things like Axie Infinity and others. They haven't really scratched the potential of what is possible on the Web3 gaming space. And if it's going to get mass consumer adoption, blockchain is going to get mass consumer adoption, you are able to have better deal flow of distributing the deal flow mechanism to an entire crowd. So it's not like one analyst or a group of analysts who are reviewing this. It's an entire community of people who can get the deal flow. not only it's helpful from a deal flow perspective, it's also helpful from a due diligence perspective, right? And we are going to be taking a short position if the situation is right on some of these. However, there are a lot of chains that launched and they are pretty much fork of Ethereum. Some of them are EVM compatible, some of them are not. And those chains, it's not sustainable to have so many chains. So some of them are going to just slowly die. They will never go to zero. That's the beauty of blockchain, is that once you have these chains going, they're going to stay on for a long period of time. If there are maybe like 2 or 3 people, these chains can go for a long period of time who still believe in the project. And at the same time, there is not much activity that are happening. And another big theme for this year is the overlap of AI and crypto. And there is a lot of development that has happened in the area of AI, specifically with large language models or LLMs. And OpenAI has released ChatGPT that you might have seen. And ChatGPT is a big step in innovation in how large language models are being deployed into the market. And specifically, the way why ChatGPT is really good is because of something called as reinforcement learning with human feedback, or RLHF. RLHF is a way in which the computers get feedback from humans on whether their prediction has been right or wrong, and it fine-tunes it. So that is also another area, and we have been looking at some of the projects to invest in the AI space. So those are the big themes for the year. Now let's look at what's been happening, right? There is a 4-year Bitcoin cycle, which coincidentally also coincides with the 4-year election cycle, right? There has been plenty of studies that people have done going back all the way hundreds of years, 100 years or so, of how the stock market has performed relative to the presidential election cycle. There is obviously a correlation, and we don't know if there is a correlation in the Bitcoin cycle, but just by coincidence, the Bitcoin 4-year cycle also matches with the presidential cycle. And so if you see every 4 years, there is a big drop in the market. Last year, it dropped almost 81%. And then the following couple of years, there is like a big increase in price. And that's the Bitcoin 4-year cycle. Next, let's talk about Ethereum. One of our big themes for the year is Ethereum and Wall Street, right? Why? Because Wall Street is driven by narratives, and we had the Bitcoin as a digital gold narrative in 2021. So that powered the Bitcoin bull run. It went all the way to $69,000. And the next wave in the next narrative in Wall Street is crypto as a productive asset, right? So Bitcoin digital gold, great, whereas digital gold is more of a store of value. It's not a productive asset. You don't see a lot of investors, traditionally value investors, people like Warren Buffett, they really don't like store of value assets because it's a non-productive asset. Whereas if you have a productive asset like a farmland or some other asset that produces value, then the market size for productive assets is 150 trillion versus the store of value asset, which is 12 trillion. And Ethereum particularly addresses many of the downsides of Bitcoin. So first is the Bitcoin itself. There is a negative patina around from an ESG perspective on Bitcoin because it consumes a lot of energy. Whereas Ethereum, with the switch over to Ethereum 2.0, is very energy efficient, right? It cut down the energy usage by 99.9%. And there are still a lot of naysayers for Ethereum, and the chain is not as immutable. The supply can be easily increased. And people like Michael Saylor, they don't like any other chains other than Bitcoin. They are maximalist, and we don't believe that there is going to be one chain in the future. We believe in a multi-chain future. There are going to be many chains, and Ethereum has a lot of potential from a next narrative perspective on how, one, it's energy efficient, two, it's a productive asset where it's being able to generate a return or an yield on the investment. So Ethereum has all of that going for it. So if you also look at the validators, the number of active validators crossed over 500 million, and it's been on a steady increase, right? Ever since the merge, the number of active validators are increasing. It just brings more security to the ecosystem as more and more validators are joining. The total staked amount is also increasing. If you look at the amount of Ethereum staked, and the Ethereum staked has been increasing again over the last year or so. And this is also crucial because as staking increases, it removes all the supply from the market and provides certain amount of price stability. There is an upcoming upgrade, a couple of upgrades on Ethereum. One is the Shanghai upgrade, which is expected to happen next month. And the Shanghai upgrade, what it does is it allows people who have been staking in the beacon chain that happened in December 2020, right? People who have staked from then haven't been able to withdraw until now. So the Shanghai upgrade will allow people to be able to withdraw. A lot of people think that it's going to impact the price of Ethereum negatively. We believe that it's actually going to be having a positive impact on the price of Ethereum, because once you make it so that people can come in and out at any point in time, it just gives people more freedom, which will make people feel more safe for staking Ethereum. And Ethereum has one of the lowest staked asset to the overall circulating supply in the staked products, right? So if you look at something like Polkadot, it has almost like 85-90% of their assets that are staked, whereas Ethereum, only 35% of Ethereum is staked. So if Ethereum gets to 85 or 90, the price will easily double, triple from here. So in addition to the Shanghai upgrade, there is another upgrade, the 4844, which is called the Surge. And it's a 100x improvement in scalability, and it's going to reduce the fees to 1/10 to 1/100th of what it is right now. So that is an exciting upgrade that is coming to Ethereum. People have been looking forward to that. Don't know when that's going to happen. Maybe by the end of the year. They say it's in the fall, but give or take a few months. There is something called as proto-dank sharding, and proto-dank sharding is essentially a scaling mechanism. It's a step toward sharding. It's not complete sharding. There is also soul-bound tokens. Soul-bound tokens are similar to NFTs, wherein which you can store specific information, but it's not transferable, right? So imagine things like your credit history, the credit score, medical records can be stored as an NFT, but it doesn't make sense for you to be transferring your NFTs, your tokens, which is the credit score or things like medical record, or even like a reputation score, right? So those are all soul-bound tokens that's connected to the particular person and it cannot be transferred out. That is another standard that has been approved and it's been coming. So Ethereum, again, we are bullish on the long term. If you look at some of the metrics like Bitcoin entity adjusted NUPL, even with the price increase of that we saw in January, we are still in this orange space, which is just hope fear. We just got out of the capitulation phase, and then if you look at the miner net position change, so in January, miners started holding on to Bitcoin. Start of the new year, right? They want to hold on to Bitcoin, but then the moment the Bitcoin price increased, they started selling, and the selling has been continuing. So it's very challenging for the Bitcoin price to hold at this level. Just what's happening with the miners, let alone the macroeconomic condition. And so because of the miners selling, it's creating downward price pressure, and it will continue to hinder Bitcoin performance. Bitcoin wallets, right? With wallets that have a balance, it's continuing to increase. There are now close to maybe 39 million or so wallets. And also, right, it just talks about adoption and how the wallet size is increasing. So that is an overview as what has happened are some of our themes for the year. So moving forward, there are so many uncertainties, right? How do we invest in an uncertain world when the market conditions are constantly changing? So the way we go about doing that is we need to rely on unchanging principles in an ever-changing world, right? What do you mean by that? What do I mean by that? So if you look at the law of accelerating returns, is a theory by Ray Kurzweil, which essentially is technological progress never stops, right? If you look at the computing, the exponential growth of compute continues to increase, right? One such example of the law of accelerating returns is Moore's law, which people might have been familiar with, which is the price or the performance of silicon doubles every 18 months. That's Moore's law. but there have been other kind of growth in computing before Moore's law, which what happened with transistors and vacuum tubes and punch cards and others. So technological progress, if you plot it, it's the amount of computation available for $1,000. Not only that itself is increasing, that is on an exponential scale, right? So it's a double exponential scale, and that is something that we can rely on. If you look at it, it goes back from the early 1900s. We've gone through the Great Depression, right? Like the war in Vietnam, the 70s and 80s period where you had really high inflation, the dot-com collapse, the 8 real estate market collapse. It doesn't matter. You can't even see that on the blimp because it doesn't matter. Technological progress is going to continue to happen. If there is something that I can bet on, right? I don't know what's going to happen tomorrow, but you can reliably say that the iPhone next year, which is going to come out, it's going to be faster and have more capabilities, right? Or the same iPhone is going to available for cheaper price. That is the crux of technological progress. That is something that we can bet on. And if you look at the Bitcoin mean hash rate, right, the Bitcoin mean hash rate has been on a steady increase. Yes, there was a drop in 2021. This is when China banned Bitcoin and cryptocurrencies. So a lot of people moved the mining rig away from China. But within 6 months, right, we are back to all-time highs and we exceeded all-time highs. So the Bitcoin hash rate continues to increase and this will continue to increase. So those are principles that we can rely on. We cannot rely on what the Federal Reserve is going to do or what the market is going to do. Having said that, thank you. We'll see you and talk to you soon. Bye.